Welcome back. It's time now for the Word on Wall Street. Top investors watching your money. Joining me now is 248 Ventures Chief Investment Strategist Lindsey Bell, back with us. Also with us is Claro Advisors Managing Principal and Founder Ryan Belanger. Great to see you both. Thank you so much for being here. And Lindsey, I want to kick things off with you. We got a market this morning under some selling pressure, but man, was it a good day on Friday. Take a look at futures right now, showing a pullback of about 39 points on the Dow Industrials. The Nasdaq right now down 69 points. And then, of course, there's Japan. The Nikkei average in record territory overnight, surging past the 57,000 mark for the first time ever after Japanese Prime Minister Sanae Takaichi secured a landmark victory in the parliamentary elections and a two-thirds supermajority. Investors betting that her pro-growth agenda and looser policy will help Japanese stocks as well as the macro story in Japan, the economy. But you got to talk about the U.S. on Friday. What a move. All three major indices rebounded sharply on Friday after some weakness earlier in the week. The Dow was up 1,200 points, 2.5% to close above 50,000 for the first time ever. President Trump predicted the Dow could hit 100,000 before the end of his second term. And I spoke with Treasury Secretary Scott Bessent about the boom in the market yesterday. Watch.
Maria, what I can tell you is what we are seeing the cyclical components of the market expand. So that's why the Dow hit a new high. But importantly, the Russell, which is a small cap index, has hit a new high. We're seeing the industrial sectors under the market hit new highs. And in my 35, 40 years on Wall Street, that tells me Wall Street is telling you that Main Street is about to prosper. We are seeing a big cyclical recovery. The president's agenda set the table in 2025, and now the American people are going to benefit in 26. And that's what the stock market is telling us. The stock market lives in the future, and I think we're going to have very strong economic growth and very strong job gains and very strong real income growth.
Lindsey, I was on the floor of the New York Stock Exchange when the Dow hit 10,000. And when they were at the podium, lots of traders, Dick Grasso was giving out 10,000 hats. In fact, I have a hat, Dow 10,000. And here we are at Dow 50,000. Incredible. Your reaction?
Yeah, it's absolutely incredible. And I think what the Treasury Secretary was talking about was the Dow theory, where you're seeing the transports rally with the Dow. So you're seeing the distribution side, the trucking companies and others perform very well, supporting the production side, which is the industrial companies that we know have been rallying. And so it's just this broadening out of the market. I think that, today, maybe this morning, we're seeing a little bit of softness after Friday's rally as we wait for the jobs report and the CPI data. We're finally going to get 2026 data on the consumer. And so I think that's going to be really important to show that the fundamentals of this economy remain solid, because we do have an increased level of volatility in the market on a year-to-date basis, whether it's from the AI fear-driven fears that we've seen or geopolitics. We still have strong fundamentals in GDP, manufacturing, services, PMI, even consumer sentiment on Friday, Maria, showed an uptick.
Yeah, so are you saying you would buy into any weakness?
Yeah, I think there's opportunity to buy into weakness here for sure. Even when you look at the tech sector in general, Maria, yes, it's entirely, they're underperforming on a year-to-date basis, but it's entirely driven by software and services. If you actually look at the equal weight index, which is outperforming the market cap weighted S&P 500 year-to-date, tech is actually the one sector on an equal weight basis that is surpassing its market cap weight index. And it's being driven, yes, by semiconductor stocks, but also by some of the tech equipment companies. So communication equipment, think Cisco or Arista, or electronic equipment companies like Jabil or Corning. So this is definitely a broadening out market, which is positive.
Well, we'll see what the data shows. Cheryl, jump in here because we've got jobs on Wednesday and the consumer price index out later in the week, right?
Yeah, exactly. And the Friday print for CPI is going to be, I think, key to watch, because January of last year and then January of 2023, that was the hottest read we got for the entire year. So if we see that trend continue this month, I think that's something that Fed officials will certainly be looking at. As far as the jobs report, there is a lot of predictions out there that we are going to see likely a weaker jobs report. Those two things, Maria, what the Federal Reserve is going to have to weigh, and that could push them to, potentially sitting on pause with interest rate cuts, which is something that the president's not going to be happy about.
Well, we're certainly waiting on a new chairman of the Fed, and we are expecting interest rates to go lower. So, Ryan, riddle me this. Yields are higher once again. Investors are waiting on this busy week of economic data with the delayed January jobs report on Wednesday. Expectations are for 70,000 jobs created, with the unemployment rate down to 4.4%. And yet you've got the yield on the 10-year up 1.5 basis points. As Cheryl just mentioned, the inflation data on deck is the January Consumer Price Index out on Friday, and the estimate there is an increase of 0.3% month to month and 2.5% year to year. Ryan, your expectations are what?
Yeah, good morning. I think it's a big week for investors. I'm thinking the jobs report's not going to be so great, not to be super negative, but I generally overall agree. I think the fundamentals of business are doing well. I'm not seeing a ton of hiring out there. I think a lot of business owners are wondering, do I need a higher position, or will AI be able to replace it, or can I grow my team more with just using some more technology? I think that's why we're seeing the unemployment rate not spike up, because people are kind of hanging on to their jobs. They're not quitting, but they're not necessarily getting laid off either. So it's a very interesting time to watch the jobs market. Generally, I overall agree with Secretary Dissent as well. I think the market is strong. It's showing a lot of fundamentally good, positive things. So we're encouraged as investors. Our clients are fully diversified, so that's been working this year. That's probably a big change from the last few years where tech really dominated. Now it's widening out, and you're seeing small cap and mid cap and international just do fantastic. So for those investors, they've been handsomely rewarded for sticking to their plan.
So do you want to buy Japan? I spoke with Treasury Secretary Scott Bessent yesterday about Japan and this huge win for the prime minister there. Here's what he had to say yesterday on Sunday Morning Futures. Watch this.
Well, Japan, the prime minister called a snap election, the quickest snap election in Japanese history. And boy, has she had a big victory today. She's going to have 2/3 majority in the upper house. President Trump endorsed her last week. She is a great ally, great relationship with the president. And when Japan is strong, the U.S. is strong in Asia.
What do you think, Ryan? Would you be buying Japan right now?
Yeah, I would agree, but I definitely wouldn't be, coming off the U.S. too much. I mean, I, like you, remember that time when the Dow hit 10,000, and then when it went to 6,800, and it's just been a great ride since then for the most part. And you just can't count out the American consumer, and the capitalism is just a fantastic way to create value. So I would, I like Japan, but I like the U.S. more, and I think there's just a lot that's positive that's going on in this country. So I think we tend to overweight the domestic economy versus the international.
I love that. Yes, I would have to agree. The U.S. feels good right now. Great conversation. We so appreciate your time. Thank you, Lindsey Bell and Ryan Belanger. We'll see you soon. Have a great Monday.